Hi, going to give you a video here to talk about the pre-earnings move ShowMe analysis technique for a TradeStation that works for RadarScreen, chart analysis, and the scanner. And this indicator basically allows you to see what a stock has done in the days leading up to an earnings announcement. And you can select the number of days before the each earnings announcement to see if you can find some type of repeatable behavior that you can take advantage of. And if you have any questions or want to look at our website, the information is listed here with our contact info. And wanted to show you the legal information, I would encourage you to pause the video and read through this fully. Basically, we're saying everything we're doing is for educational purposes only and is not intended to give you any type of financial advice. We're not giving you any recommendation to buy or sell anything. Everything you do is solely and fully your responsibility, so you need to get the appropriate help from the right professionals, and all the decisions you make are fully your own. We're not giving any type of advice, and again, everything is just for educational purposes. Okay, let's get going here. You can see we've got the radar screen, got a workspace in TradeStation with the radar screen and chart analysis. So let's go ahead and insert the indicator. Let's see, insert analysis technique. It's a ShowMe. So we want to come down here. Pre-earnings move, add, format. I usually do about 5 years, so make about 5 years worth of trading data. We come over to the inputs. This is all explained in the PDF that comes with the indicator on the TradeStation website, where you can download this. But just to kind of give you a quick overview, this is the number of prior reports that we're going to the total number we're going to look at if they're available. And this is the minimum number of reports that we want to consider. Sometimes I'll set this to maybe 3 or 4 to make sure that we've got maybe a significant history that we're looking at. And this is the days before the earning report that we're going to start looking at. So this is the start, 10 days prior to earning report, and we're going to stop the analysis 1 day before the earning report. So this is basically the 10 trading days before the earnings report comes out. The move threshold, that's saying, okay, we'll assume that we're looking only for up moves. If you want to look for down moves, you can set this to false and it'll look for down moves. But we'll assume for the purposes of this video, we're just going to look for up moves. So what this is saying, the 75%, that means that of the 5 prior quarters, at least 75% of them have to be up before we'll consider this to highlight it in RadarScreen to draw your attention to it. So of course, if we have 5, at least 4 have to have moved up before this threshold will be met. And you can obviously change this threshold to whatever you want. And then also we look at the average of the up moves, and if they're at least 5%, that's the default, then they'll be highlighted in the radar screen as well. Again, you can set these thresholds to whatever you want, and these thresholds are used in the scanner as well. So we'll talk about that in a separate video. So let's go ahead and say okay, okay, boom, boom, boom. Comes up. Let me just scoot some of these over so we can see everything here. Okay, and let's just go ahead and insert this in the chart analysis, and we'll talk about it a little bit. So again, same thing. It's a ShowMe pre-earnings move. Okay, and again, we'll just leave all these as the defaults. Basically, the ones for chart analysis that are significant are kind of these day ones here. You want to make sure that all this stuff is, if you have a chart analysis window and you're comparing it to a radar screen, you want to make sure all these settings are the same. So if you've modified any of the defaults up here, then obviously you would want to change them as well if you're going to look at this in chart analysis. So let's just say okay. So let's take a look here. What do we got? I'm sorry, let's scroll this over all the way over. Let's see. Okay. We've got Alcoa here, and just to explain some of the display here, you can see there's first quarter, second quarter, third quarter, fourth quarter. And what this means is reports that come out in the first quarter, and reports that come out in the second quarter, reports that come out in the third quarter, and reports that come out in the fourth quarter. So, this is the first 3 years. First 3 months, January, February, March, then April, May, June is second quarter. And since this video is being filmed June 2nd, 2014, the indicator just kind of puts a a light gray background on the columns for the current quarter, just to kind of draw your attention to that. So you'll kind of know which one maybe you should be focusing on. And let's see the explanation. We'll just start here. This is showing you that 60%, or 3 out of 5 times, Alcoa had an up move in the 10 days prior to its earnings report that came out in the second quarter. And of those 3 up moves, the average of the up moves was 4.91%. And the minimum move was 4%. So you can see this one's, when it moved, it usually moved at least 4%. And then this is just telling you that this basically, these MET columns are going to be really used in the scanner, because this is an aggregate of these conditions telling you if it met the 75% threshold here that we had, and the 5% threshold, then this would be set to true. But obviously, since that's not the case here, this is set to false. And you can see that happens like right here in the first quarter. Alcoa, 100% of the time, the last 5 years, the report that came out in the first quarter had an up move, and the average of the up moves was at least greater than 5%. It's 5.28%. So this one would be marked true, and this would be one that the scanner would find with the conditions that we set. And again, you can change the input conditions to find whatever you want. But you can see where this Q1 MET criteria got set to true, and that's because we broke the 75% threshold here and the 5% threshold here. So that's basically how the RadarScreen works. And you can see if you're in the current quarter and one of these is broken a threshold, it's going to be highlighted in this green color. So you can see right here, Caterpillar. Let me just change the chart. Look at that, Caterpillar. So 80% of the time for the past 5 years, the report that came out in the second quarter was we had an up move leading into that report, and the average was 3.4%, and the minimum was 1%. So again, that didn't exceed our 5% threshold, so we didn't get a true here. And okay, let's go down here and talk about the chart analysis real quick. You can see we inserted the indicator down here as well, and the indicator will show the days that we're looking at on the chart. So where we're at, Caterpillar, second quarter, you can see their earnings report. Let's see, here's the day that the 10 days leading up to the earnings report. So you'll see the quarter, it puts a 2 up here, or a 1 for first quarter, and here's the 4 for the fourth quarter. And the B is the beginning, or the first day that we're looking at. So the opening price on the beginning day is compared to the closing price on the end day, and that's the comparison of those two prices is how we get this percentage right here. And let's see, I think that's pretty much it for a quick explanation of the chart analysis and the RadarScreen. And again, you can do this. I just did basically most of the Dow stocks essentially here, and you can see some of them in the second quarter have pretty consistently have some up moves. Now maybe not a great move, so whatever your plan calls for, maybe this is something you consider. Maybe you would say, it's not a big enough deal for me to worry about. But again, that's up to you and whatever your trading plan is. So again, if you have any questions, you can look at the first couple slides. We had our email address and the web page address that has this indicator and other ones as well. So this one is a paid indicator, but it has a free trial period. So download it, take a look at it, and see what you think. And if you have any questions or comments or ways to make it better, we'd love to hear from you. So send us an email. And thanks for watching.